taking forever. Okay, and good morning. This is Simon with Trade and Perform Coaching, doing the market preview for CL, NQ, and ES. So number one, we have CL, 9:30 Central Time, Econ. Basically, the oil inventories. I don't trade till at least 15 minutes after if it's slow, 30 minutes if it's moderately fast, and an hour if it's out of control, right? So I want to make sure I don't get swept up in any kind of quick illiquid move. And so stepping aside, you can trade it if you want. You can not trade it if you want. Just realize if you're trading it, you're competing with everybody in the whole wide world and people with a whole lot more buying power and selling power than you have. And it can create some really nasty losses, right? So I posted the charts last night to members. Let's go through them really quick and look at the profiles. So let's start on ES, and we'll go to CL, then we'll do NQ. So here's ES profile. And I could have sworn I had more. Oh, I do have more than one ES profile, actually, now that I think about it. I have. Let's see. There we go. Let's drag it up and see what we got. Okay. So this is the beginning of our decision-making process, right, between ES and Q and CL, right? Where are the critical areas of support, right? So number one, we closed away, right? We closed away and at an extreme. Away from value and at an extreme, and we're gapping down, but we're not gapping down below prior day's low, right? That would put us at 28.29. So what I'm specifically, and we're trading 28.35. This is unfair pricing, and if you'll notice, we've simply been unable to trade below prior day's low for the last couple of days, or one time into the upside. We need to trade underneath to simply end that process. We have the Fed at 1 o'clock. There's a press conference at 1:30. And that can make things more challenging to trade the Fed. Again, it's the same deal on the Fed. Sometimes it's nothing. The problem is when it is something and the volatility is incredibly high, like going down 20 points and up 20 points in 5 minutes or less, right? The losses can rack up really, really fast. B, we really don't need it to make money, right? The idea behind the thought process and the strategy is, right, you're building size over time, and you're entering in fairly innocuous markets, meaning you're pretty damn sure when you take the 3 up, 3 down, or the fractal up, fractal down on the entries, right, that you're not about to get your head chopped off by a samurai sword, right? So, yes, could you make 100 ticks or could you lose 100 ticks? Sure, right? My only response to that is, well, why trade there when you can just simply trade where it's easy, right? Easy being a very relative term, right? But easy meaning you don't have to worry that much about someone coming in with a massive order to sweep your trade, right? That's me. There's some people that like to trade the news, and if you like to, be my guest. It's not my flavor, and I don't worry a whole lot about it. Okay. I want to see if we can trade underneath. I would expect, given the environment, that we will trade up into. Let me mute everyone to make sure everyone's muted. There we go. I would normally expect on the on a Fed day where buyers have been in control that we would push up into the Fed, meaning what I'm hoping for is a push down into some type of support level and a reversal back up. What's interesting about the profiles underneath is see how all the points of control underneath have all been tested. That makes this the prime target down, which would be 28.13. We're trading 28.36. It's 20 points down, give or take, 23 points down. That is highly achievable, and I would look to be a responsive buyer between there and if we squeeze behind here. If you look behind that, the next logical place is 27.95. It'd be hard to imagine us getting there without a driver from the Fed, primarily. Now, if I were you, I would treat the after Fed. I'd treat the whole thing as a whole new ball game after it starts. And now your range expansions can be considerable to the upside and to the downside, right? Your primary resistance is going to be sitting for the day session right there at 28.50. And there are levels in between, but the clear target above, and it can be achieved on a Fed day, right? It's 28.31. You can get 50 up. So 50 can turn into 60 if the Fed says the right things or it's even perceived as the Fed saying the right things. So that 28.95 is actually achievable. It's a round number. And again, I'm not making any predictions on Fed day other than say buyers are clearly in control. We're way stretched. The other thing I would keep a big eye on was that March 8th was the swing low, right? And so I'd mark this down. I don't have it on the calendars, guys. I know I didn't put it in there last night. The 50-60 is currently sitting right here between roughly 27.75 and 27.85. That area right there, I would have, particularly if you are going to trade the Fed, and again, I'm not, but if we slam down into that, expect absorption and responsive buying in there. If we get underneath that, that changes the ball game a little bit. But I would expect a solid move out of that location. If someone said, well, what do you think is going to happen out of there? I'd say you get a pretty damn solid move if we slam into there. And then the question is the broken supports on the way up. But I'd be very surprised if we broke that. So that's my 2 cents on ES. And again, I skipped the first half hour. ES range opened up is the other thing to note. That was the biggest rotation we've had in many, many days, where it was up and down, right? We had a big range back on the 9th, but the rotation size, or whatever date this is somewhere between the 8th and the 12th. But this was a large range, but it was all one way. This is a large range, and it had two sides to it, which is great, right? Realize that was your attempted double top back there, that 28.13. So backside test of that. Again, that lines up with a support level. Again, if there's not a driver, I would expect a response out of that general area first time in. Let's go do a CL, then we'll do NQ. And I believe, I'm going to verify right now, we have no econ at the top of the hour. Again, all of that just brings all the more focus onto oil inventories and then the Fed number. And I will probably stop trading at 11:30 because I don't like screwing with it. If I'm long going into that number, I get a long setup. I'll hold it as close as I can get to the Fed, but I will not hold it into the Fed. Just not worth it for me, right? So, and it breaks my discipline. So that's that. Let's go do NQ really quick. Excuse me, CL. I apologize. So CL profile. Interesting night last night, right? So, wow, didn't mean to do that, but that's all right. I'll find it in a second. Okay. Let's get this back here real quick. There we go. We'll drag this down. Let's get this back over here. Oops. Huh, good to know what this is. Okay. Okay, CL. We stopped one timing over here. You usually look for a change in character over here. Right? Balance over here. Right? So we've noticed that we went from driving straight up. So see how we're pretty much going up every single day? We stopped one timing. See how the character's changed ever so slightly over here? Right? And what does that character change mean? We've started trading sideways to slightly down. Also notice the other character there. See how we've punched? If we look overnight at how the PA worked out on this, there's the last swing low. Here's the next swing low. And so if we look at that 89 to 75, and I will drag that over here in just a second. Let's look at this on a 5-minute instead of going down to the setup. Yeah, there we are. Nope, we will look at the actual setup. I have a horrifyingly large number of drawings on this, so I'm going to erase them all. There we go. So if you look at 89 and 75 and you bring it up. So here's the 89. See that? That was the old swing low. See how we so that was yesterday's low, right? So see how they tried to hold it right there when we tested it, closed underneath, point of control, rolled underneath. That 75 was the next level. See that where that swing was broken, pushed underneath, right? So look at the character of how that's set up because it matters during the US session, right? This was the target down. That was my support level. So you get 3 down over here, and then you have a shot across the bow right there. See that little innocuous 3 bars, 1, 2, 3, really tiny, right? See how it's marked off there? So it's this right here. Doink, doink. Looks like nothing, right? That is the, you draw a line across it. Okay. See how once we got above it, short squeeze to the upside? That's why the shot across the bow is important, because sometimes you don't get the 3 down in the process of getting the trade. And watch how this works. See how we're pushing down? So guys on YouTube, I'm sorry this won't make any sense. I don't have time to explain the whole thing and have it flow in any kind of order, right? But see how we're pushing down, right? And there's no, so there's 2 purposes behind this, guys. Let's say you're short CL, right? We don't get a fractal to the downside, right? We don't get a really big delta push at the low. We do get the speed bars right at the bottom, but without that 3 across the bow, you really kind of are left with, what you're left with is this move over here to cover. So when you're pushing down, remember yesterday I showed that same trade where I said, hey, if we look here, right before that final dash to the downside yesterday, I covered because, why did I cover? Because I got to this shot across the bow right here. Remember this? So we were pushing down. I didn't get a fractal to the downside. I did get this fractal over here, but then I got the shot across the bow. So I covered it a little bit late. Actually, I covered right here. I think I covered right here or right here. I forget exactly where I covered. One of the 2. I should have covered right on this bar right here is where I should have covered for 27 cents. I think I covered for 30. I think I left a stop loss, buy stop at 32 cents. And I was short from 44, if memory serves me, right? So see this and how eventually it rolled all the way down. And you go, well, gosh, it actually rolled all the way to the downside, Simon, right? But the whole point behind that is sometimes with that shot across the bow, I'd prefer to just try to find a new setup for a roll to the downside versus, because sometimes you end up with this where all you get is that shot across the bow. And at the minimum, even if you don't flip that long, you should take a good chunk off once you close above that, guys. So, because it can end up in really nice pushes. And then if you look off to the right, what you ended up with was 3 to the downside, right, which is 1, 2, 3, fractal up, fractal down. There's your last fractal. There's your close above. And that gave you your launch to the upside right at 758. I would have never traded that because I don't trade the open. And that's pit session open 2 minutes before. But that's what triggered that, right? So this tool, and again, to guys I'm coaching or guys who have Sierra chart, I'll happy to distribute this. It just takes a lot of mental work off of watching the 3 ups and 3 downs. Makes it easy to spot, right? So moving along, right, to the profile. When we look at this big picture on the profile, let's go through the basics of what we're looking for. We're obviously no longer one time into the upside. We broke it again, right? We broke it here. Now we've broken it again. We've traded below prior day's low during the US session. Key areas. Top of an open window. 56.64. Dalton's gap fill, and there's a settle price gap fill. Let me make sure I have this at the right time setting here real quick. I do. There's a pit session gap fill and Dalton's gap fill. They're lining up together right here from 56.40 to 56.64. I'd be willing to bet dollars to donuts. You get a pretty damn good rotation out of that general location. I'd be looking to get long if it's slammed into it after oil inventories are stretched into it. So that doesn't mean I'm taking it automatically. I'm looking for a setup out of that location. I'm certainly scaling if I'm short into that location, if I somehow manage to get a short from up here and I'm still short when we get down here. Okay, behind that, right, that anomaly, this anomaly, and really everything underneath this is a key area. That's the swing low. I can't imagine we get below 54, but it's oil, so stuff can happen. That's the current swing low, 54. Above the current high, notice that that is a poor high on CL. what that means is if it's tested, it's generally easily broken. I would not fade against it until you get excess on top of it, or you get a clear entry process on top of that oil, right? And then if I measure, right, and I go from my current swing low, my current swing high, I end up with a big picture 50-60 retrace from here to here. That puts me at 57.20 to 56.80. The 62 retrace aligns with the top of the open window and just below it, the mid of the half gap and Dalton's gap fill. Again, that's a very attractive area for me. Okay, so the other way to measure this 50-60 retrace that gets a response is from the top of the open window to the current swing high, right? And to look if there's anything there. So this is a weaker 50-60. All you would have is a trap back in below this swing low, right? So it could work, but I don't have anything to hang my hat on in this particular area. So again, I would write down the key areas. The big picture 50-60 ranges from 57.29 down to 56.65, which is also the top of an open window. Dalton's gap fill, 56.47. Again, I expect a response from this area. And then all these locations just below should get a response. It would be key to get back above the 50 to push back and retest. Obviously, if I clear or I'm above 59.79 after that oil inventory number comes out, I don't particularly want to be short, right? If you look, the next naked points of control, right, that are untested are all the way up in the 62, 62.23, 62.34, 63s, right? Is that achievable? Well, 200 ticks kind of gets you to 61, 300 gets you to 62. And on oil inventory days, yeah, that's doable, bottom line. Excuse me a second, my wife's calling. I got to take this call real quick, guys. I apologize. Hello? Sweet? Nicole? That's always disconcerting when your wife calls and then she doesn't answer. So hopefully she'll call me right back and everything's cool. So moving along, right? If you get above this, there's really not much here. Yes, there is actually structure if you look back to the left over there to those areas, which takes place here, right? And if you look within this window, so the other thing to pay attention to, this is at 59.75. Yeah, back of this anomaly area, that in general, top of the open window, Dalton's gap fill. This is all laid out on the chart, right? And then this would end up being a white zone up here at 62.27, but that fills in the space in between. And then that's approximately the mid of the half gap is 60.93, right? And all of those become valuable for counter rotations, again, within the context of oil inventories. So I don't have anything else to add besides that. And again, I don't trade it in front of oil inventory. So 9:45 to 10 o'clock will be the first time I even start gauging for a potential setup, right? So let me move this here real quick. And let's do NQ. So you can see we had a range expansion. You can just visually see it. And we traded well on both sides of the market yesterday. You can see yesterday afternoon we came right down to this TPO and volume point of control, got responsive buys. We still have failed to trade below prior day's low in multiple days on that. It's simply one timing to the upside for many, many days now. Going from the time we lifted, we simply can't trade during the U.S. session underneath the prior day's low. That needs to happen in order to stop the one timing. Until then, buyers are in overall control. There's simply no sell pressure on NQ, right? Semiconductor index looks fantastic. Biotechs are doing okay. There's not a lot of reason other than we're way extended to be bearish. So the key areas, again, considering it's Fed, right? So very basic, like everyone should have this. It's so easy to do, right? Number one, expect the 50-60 retrace to provide support in this area, and particularly when there's something in there to help you out. And what's there to help you out, right? Although it's a pretty crummy profile, is this point of control that's sitting there. I'd expect in and around this area to get a response out of that 71.83 location if we can get it, right? Again, that would be, we're trading 73.72, that's 71.83, so it's going to require a 200-point down day. So how we get that or how we manage that would be a violent expansion of range. If you remember December, October, November, it's doable. Is it probable? Probably not, right? The other way to look at it, which doesn't make much difference, is drawing it off this swing low over here. Other than that, the key areas are if you get below, right? If you get below 73.46 and fail to recapture it right there, your next naked volume point of control and next naked TPO point of control that are combined, right? It's pretty simple on this one. That 72.90 to 72.80, again, from where we are right now, right, that's 73.74, 72.74 brings you right in this area. That's 100 down. Expect an attempted response from there. And then this is the next logical area. Actually, that's not true. This is the top of an open window. It's bottom of an open window, 72.51, Dalton's Gap fill. Top of the open window, 71.56. That'd put us down about 170 points. That's also a key location there. Again, the only reason I'm highlighting them, I don't expect to get there, but if we have a violent reaction to the Fed and you want to trade it, that's your go area. If you look above, key area, still untested, is that 74.47 to 74.56. And after that, it is a black hole above all the way up to 77.41 to 77.20. I don't think that's any more likely than this is. And I think you just go with the setups from here. And we hope to end the one timing at some point today, right? And like I said, the good news is yesterday we had a clear expansion in speed of rotation and speed of range. So when you get away from all this noise, right? So this is resistance overhead, right? This is support underneath. These are unfair prices. These are unfair prices below. And that's an anomaly, which gives you much stronger support, right? And then what we're looking for in that process, let's scoot this over, right, is just like yesterday afternoon. I'll post a video for the members again, but it's on the YouTube channel. If you'll look, yesterday afternoon was a perfect example, and I did it in real time, which is why I pointed out. If you want to watch it, yesterday afternoon, here we go. Okay, so there's a couple of key points there. First of all, I did it in the last hour, which put me over here looking for the long. What day am I on? Tuesday. There we go. Why is this not showing the setup? Ah, because it was over here. There we go. Okay. So we were watching this push to the downside, right? So see, these are shots across the bow right over here. See, as they're pushing down, you're getting the shots across the bow. And see how we're not getting, so I'm going to draw this together so it looks a little bit more normal, right? So these are this. There we go. So you're in this free fall, right? And you're looking to get set up for a long or to cover your short, right? So notice this is rolling down, and you can watch it in real time. It's the last 20 or 30 minutes of that video that I posted yesterday afternoon on YouTube. So watch. Potential long, never triggered. Actually, and the short is actually what ended up triggering over here all the way over. Oh, that was really tricky on the short, but it actually ended up being this bar all the way over here. believe it or not, or this bar. But okay, so key. When you get set up for a short, right, and you're already down in the hole and buyers are in control, don't short is my suggestion, right? Wait till it rotates up. There was good shorts from up above, right? But you're looking to get long. So notice this doesn't trigger. This doesn't trigger. This doesn't trigger. This doesn't trigger. The shot across the bow. This doesn't trigger. There's your 3 down right there. Notice you don't get it accompanied by a fractal. All you get is the speed bars. You get a down-facing fractal, but you don't get a fractal pointing to the upside like this, right? So you have to improvise a little bit. And this goes back to your trade plan. Do I need a fractal down and a fractal up to take a trade, yes or no? I don't. Some people do. The highest odds, the best trade setup is the 3 down on the momentum wave, right? With a fractal pointing down, fractal pointing up, and closing behind it. We didn't get that here, but this is still good enough for me to go on, right? And I did in real time. That's your trigger long on that bar right there, 73.60. The target was actually 73.92, it was a little bit higher. But if you look, if you took that 73.60 or 73.63, I forget if I took it here or here, which one I took it on, right? Let's say we took it at 73.63, right? You were able to scale up almost 10 points on that trade. I think it took 7 or 8 points on the scale and moved stop to break even. It was the end of the day. It was the end of the day, so it was 2 contracts. It was just for demonstration purposes only, right? But took the trade there. You got your 10 points almost, right? And you move your stop to break even. You hope it works out. The goal was 97, I think. And you can see, so here's the deal, right? All it did is come back for a 50 retrace. It just got behind this fractal, which is why I closed the trade. Again, and I mentioned in the video, you'll see I said, if I thought that was the bottom, right, what I would have done is this. Scaled, drawn the 50-60 back, which you'll see we pushed right into, right? And then added at the 50-60 back, right? Remember, I already have the scale from up here, gone back to full size, and stopped out here. I would have never taken that trade the last half hour on real size, and then pushed to the upside to the 73.80, and that is a fantastic trade. But that is picture pretty much textbook of what we're looking for when the market's rolling to the downside and you're trying to figure out, hey, where do I want to get long? That is what you're looking for. And you'll see repeatedly yesterday, even into that 1152 area, we just didn't get the best setup that we were looking for, right? If you'll look, what we ended up with was a late shot across the bow, which was right here. It immediately closed above and pushed. That's pretty hard to catch because it doesn't give you any time to set up. But the point behind that is you didn't get a fractal up or down. You didn't get anything in this location to help you cover. So let's say, and why is that important? Remember, this was news, so that's not that abnormal with news. So let's say you were short somehow from up here, right? And it's rolling all the way down from 74.20 to 73.80, and you're trying to figure out where you want to cover. So you can either just flat out cover because you've got support or you're into an area. But if you're looking for the price action, right, we don't get set up on what we normally get set up on. So if you get this shot across the bow right here, even if it's off the low, and you close above it, just take the P&L out because it's highly likely to push like this and you get wiped, right, on what's otherwise a very good trade, okay? And then if you were looking to set up on the short again, you will notice as we pushed up, you got, again, this is your 3 down, right, shot across the bow right there, right? We closed above it, but then you'll notice we closed below. We did a 50-60 back. It gave you a rotation lower, 3 down. Again, no fractals, right? It just didn't set up properly. Closed above, pushed, and then if you'll notice over to your right, there's your next shot across the bow right over there, right at the top of the hour. We closed underneath. You simply had to have a faith or a belief that we were going to roll lower, which I'll grant you was very hard after the last couple of days, and it rolls down and it sets you up for the long again. So if we'll plug all the pieces in and we'll come to understand that there is a rotation up and down, guys, these work very well. And then that takes me back on the last piece, going back to today's Wednesday, Monday, right? Where there was no rotation. We just didn't have any of this openness in the PA, in any of the products, right? CL, it was all muted, right? If you look and you don't see your setups coming in pretty regular stances, right? So I want to bring this point up for the bigger picture, right? If you don't see your setups coming intraday on the regular, right, and you look at it, your response should be just exactly what I said. I don't make that much money in this kind of market. Guys who make money in that kind of market, which is grind straight up, are swing traders, guys that hold overnight, or they buy right on the open and they just hold, right? And it goes in cycles. That works for a while. But this works pretty damn consistently if you have the market moving, which is 90% of the time, right? So when we get to those markets that are extremely muted, so you notice on Monday I took 2 stops back to back, I think, or was that Friday? No, it was Friday. Monday, took a stop and a half, I think. And both those stops were profitable at one point, and I just said it's just not there. I'm not going to keep pressing the trade, right? The movement, the up and down, the signals firing, right? The 3 up, the 3 down, and the number of bars that are being counted per hour, which, Bill, by the way, we need to go in and look because I think there's a correlation as a side note. I bet there's a correlation in number of bars per half hour or hour being printed and the number of and our profitability. I bet there's a direct correlation in that, right? Off this 3 range on NQ, we'll go look at it, but I bet it's the same on CL too, as another way of gauging the condition of the market. But the point behind that is if you'll just wait till it opens up, the P&L's there, right? And we end up having a good day like yesterday or the prior umpteen weeks that we had before last week, right? We're just ground to a halt. And remember that it's normal when you get to the very tippy top of a market, right? People are extremely confident. They're not afraid. Their stops are way down below, especially, you know, people are investors and they look at their 401k or whatever. They're like, market's up 20%. What do I have to worry about? Mutual fund and hedge fund managers. I'm long. What do I care? It's very hard to develop the fear necessary or the uncertainty until you break. Now, once you have a down 1% day, everyone seems to wake up, and then you get some volatility intraday, right? And then we start making money again. So your job, if you're a day trader, this is really important. Recognize the markets that are paying you and how they're paying you. And if you're not, and if you're a swing trader, what I find is guys trying to fit the curve perfectly to every environment. And I don't know anyone who does that extremely well. Is my 2 cents about that. So with that being said, let's get started. Let's go look. Obviously, I'm hoping that we'll get set up one way or the other. You can see right on top there before we had that roll down. Again, we don't have econ top of the hour, but there's your 3 up. All right, 1 right here. Again, I don't trade the first half hour, so this means not a lot to me, right? There's your first close underneath. That's technically your second close. That's your push down, right? Again, not breathtaking, but the setup worked, right? So this one I'd have a hard time taking when it's only 1 tick underneath. It's hard for me to take. That was valid. And then the only question is, can we get the 10-point extensions down and up for first scales or not, right? And you also, by the way, guys, that was accompanied by a fractal trendline break. So that's helpful too. That was your fractal down. That was your fractal up. Like you literally, in that one example, you had 3 up, fractal down, fractal up, close below either way here. And now you're looking for the 50-60 back. What you really would have hoped for is entry, 50-60 back, and flush. Instead, you just got flush, or that's hard to call that a flush, but push down, right? And now you are in 1 minute before algo land, and you would look for some kind of retest down to the downside. Again, what I'm hoping for over the next hour or two is that we get pushed down into a level somewhere down here, and we get a long signal for a grind back up into the Fed, and that's what I'm hoping for payday, or that CL sets up after oil inventories, which are in half an hour now. So, anyone have any questions? I think I covered all the bases. Between yesterday's video, which shows the trade setup live and in real time, right? There's not much else. There's not much else to talk about. By the way, that's still a valid setup, right? On that 50-60 back right there, right? It's 9 o'clock. Fractal up, fractal down, that's the first retrace. Stop goes above 73.80, right behind this fractal. That's usually, not always, but usually a pretty damn good setup. Would be my 2 cents about that. So, and I would normally want to press that trade. And then your stop is pretty easy. You get a shot across the bow. Whatever it is that you're going to get that's going to trigger that stop, I would attack that in most circumstances because I think it's a good trade, bottom line, right? So that's my 2 cents. And I don't have anything else to add beyond that. That's a decent location, guys. And that's it. So anyway, let's get to work, see what we get set up. I'd rather have just initiated it up here, so I already had a scale. So I'll let it go through a cycle. And again, I'm hoping for a push down so I can get a location below or push back out and up into yesterday's range. We'll see if they have any desire to provide that for me. So thank you all for joining me on YouTube, and hopefully I'll be able to do this again in the morning. Have a great day. Trade smart, guys. Oh, last thing. Remember, this is for educational purposes only, and it's my trade plan. You can lose a lot of money trading futures. Make sure you have a good risk profile, right? And you know how to manage your losses. That would be my biggest suggestion. And, of course, past performance is not indicative of future results. Thanks, and have a great day.